A warm welcome to everybody that's tuning in this morning to the opening bell. I'm Ashley Reeve here, guys, and welcome. Before we get started, remember the information we discuss in this video is opinion and should not be construed as advice in any way. All right, a very good morning to you guys. It's an absolute pleasure being with you here this morning. As always, guys, we want to give you quality content that assists you to become an independent trader. At the end of the day, ladies and gentlemen, the quality of TD Markets, TD Academy is that we train and educate our students to become very independent. You're able to, analyze the market by yourself and execute accordingly. We give you all the tools and the understanding needed for that, yeah? And today is no different. This morning, opening bell here, we have some fantastic information on what's happening in the market here. We got something on the Australian dollar. We are looking at the yen in the trading room this afternoon. Something on the dollar, the gold, as well as understanding the big picture, actually, yeah? So the main driver of the market this morning, or at least in this trading week here, which is actually no different from last week as well, the Middle East conflict, guys, and how it affects the oil price. There's obviously a major chain reaction over there. When the oil price goes up, inflation goes up because there's a lot of costing that's associated with, attaining it and retrieving it or getting it. When inflation goes up, then central banks are now put on, or there's pressure that's actually placed on them. Do they raise the rates? Do they hold rates or not? And when rates go up, currencies and metals react to that. So we're looking at some of those there this morning. The overall impact is that markets are obviously uncertain at this point, and they are reactive, uncertain and reactive. There's a lot of volatility in between, and everything is currently driven, like I said, by the oil prices, the interest rates, and the war developments. All right, so let's look into it from a more technical standpoint, the charts in specificity. Let's look at the Australian dollar to the dollar here. What's happening in the Aussie economy is the inflation is still pretty high there, mainly from the expensive oil due to the Middle East tensions. The Reserve Bank of Australia is raising those rates, traders, to slow down the spending and to control the prices. That's important there. All right. And so markets are expecting another hike soon there. It's giving the Australian dollar a little bit of strength. You can see yesterday we had quite a bit of a movement from the Aussie dollar going up here. A bit of resistance, I would say now. Obviously, we're looking at it short to medium term, which is important. All right. So we're getting a bit of divergence happening here, meaning that the strength of the Aussie has somewhat diminished. That does not mean that we're not pushing up further. We're actually watching the highs of yesterday and the Tokyo session, which we are in now. We're going to, end of the Tokyo session around 10 a.m. South African time. So when we do end of that session, we're going to see where we get the candle close. If we get a push to the upside here, that simply means that there could be some more Aussie strength coming out here, and we might just jump into that later on, in the trading room. And what we would be looking at, all right, what Ash will be looking at in that specific regard is the following. I'll be looking at some movement to possibly take us to about 0.71, about 71 cents US dollars for one Aussie. That's what I'm looking at. But we're going to have to wait and see what happens. So I'm actually looking at it on the 1 hour chart, trying to see if this divergence does play out or if we push down. Because what we must not forget, guys, is that whenever price creates a high, there is always a correction. Now, how deep the correction goes, it could be somewhere down here, back down to the lower levels in the 70-cent mark against the Aussie. And so we're going to see what happens. There's a lot of consolidation now that's happening early in the morning. We're waiting for price to move away from it. All right. Euro USD, though, has broken through the low of this morning. The Tokyo session has created a low, and we want to try and see what happens at 10. There is a lower area here now, and there could be a bounce. So just be careful here, right, Shay? Remember, the Tokyo session is not done yet. With the London session is in progress right now, so the overlap has already started right now. The London and the and the Tokyo. So this is the low then now. between the London and the Tokyo session. All right, so we're gonna have to wait and see what happens. If the London session after the Asian one is closed continues to break below here, we're looking for price to come back down. All right, that's what we're looking at. But it looks like there could be some a divergence happening here as well. I mean, look, it's pretty obvious if you look at it from that angle. Look at that. Right at that support, we're seeing it happen here as well. So the divergence is there. We could be pushing up. It's possible. As you saw, the dollar strengthening a little bit here this morning in the Tokyo session was seen. But then also NAS is looking pretty good here. All right. We're looking at, when I say good, I'm talking about the correction to the downside. We saw the dollar, doing something totally different to this morning, or at least today, and we saw the NAS actually push to the upside. I'm waiting for some more information in the London, session to actually come out. All right, at 2 o'clock, I'll be giving more of that through when we're in the trading room, in the live trading room. At this point, we are only seeing the interchange between the Asian session and the London or the European session right now. There is a low that has been created here, and we want to see if we bounce from that low at 10, or do we continue to the downside. Right now it's pretty bearish at this point in time. All right, so there's many guys that's already in here. They've already gone short. Nothing wrong with that, guys, or but just do some adequate risk management. Make sure that you calculate correctly. Why? Because if you do calculate correctly, then obviously you can either break even, or you can obviously get out before the time. There's different ways to look at it. Risk doesn't always necessarily mean that you're going to be using a stop loss, although a stop loss is recommended because it is a safety net. The platform provides that, but there's obviously different ways of trading, and so depending on the style and your schedule, if you are a intraday trader, you're trading the current structure right now, you're more inclined to be closer to the charts at this point in time. All right, and you'll be watching it, so you can always get out almost immediately if you'd like to close the position. But if you're trading up from a different schedule, you're only available every 6 hours, every 8 hours, then obviously stop losses would be the go-to for that one. At this point in time, we're seeing the NASI push down, and we are waiting to see what happens after 10 a.m. The cryptocurrency also very interesting here, guys. Last week we saw a bit of a surge in Bitcoin. I'm speaking in specificity now. I'm dealing with Bitcoin as an asset within the crypto market. All right, we saw a bit of a surge there. We also saw a surge in the Ripple crypto there as well. We saw a bit of a push to the upside. And we're seeing that it actually broke and created a beautiful high this morning. It's obviously retraced that high. So we want to try and see what happens now at 10 a.m. Does the price continue to the downside or not? And we'd be engaging with that at 2 o'clock this afternoon. I'll be looking at some of this again. All right. But from a daily perspective, there seems to be quite a bit of a stir right now due to the political and the geopolitical tension that's going around the strait. There's a lot of movement at this point in time. Many guys are looking back to crypto, because Bitcoin has fallen so sharply here. I mean, we came all the way down to the 59,000 area. That was 2024's highs as well as 2021. So it doesn't look like there is sufficient support yet when you look at it from a weekly perspective. It really just looks like we are trying to find some form of support. I would not be surprised if we do push down a little bit further for one more, a push to the downside here to about 53 and find the support. Right now, I'm not seeing any divergence on the higher time frames. In fact, I'm seeing the true movement of the charts. I'm seeing the true movement of the move of the sellers that's coming down very strong. So there might be a little bit more of a push. This is a lower high, obviously, from that area that has come down. Lower highs being created, and many guys are taking advantage there. So, from a technical standpoint and what's happening, because people aren't going back to crypto at this point, doesn't mean they're not going to. Obviously, the focus now is on the metals. Focus is on the safe haven assets like your gold and your silver, and even the yen is also considered safe haven currency. Investors are looking to those to safely store their money and make some more profits. There's been a bit of a miss there in the crypto side. So We're going to wait and see how it goes. Let's give it today. Let's give it tomorrow and see what these daily candles show us. Only yesterday we had a beautiful push to the upside. Look at that candle language there. The close of yesterday's candle is very far from the open. So that's important candle language that you need to look at. Today we're seeing something totally different. We're seeing the open. We saw price surge up, and we're seeing the close has now moved closer to the open, which is telling us that sellers have obviously come in. So we do not want to be naive and take an ignorant position here. We want to try and wait and see what's going to happen. Do we push up and validate yesterday's high by closing above, or do we come back down? If we do come back down, be very careful. You can obviously go and correlate that with the oil price. We know the strait is still uncertain at this point, guys. There's still a lot of tension going on there. There's a lot of camaraderie around Trump's campaign. They're calling it the bombing campaign, so to speak. And it's been, 2-3 weeks now of continuous talks about keeping the strait open. There's now been, some comments around, the strait, saying that Trump, President Trump doesn't need any other country, but he is obviously inviting them to take part of it because, the U.S. being the biggest economy in the world, that's, from what it seems, what he's saying is that the U.S. is attempting to maintain order in the global market and the bigger scheme of things. So that's that's at least the sentiment that's going around. Many disagreements, obviously, many's disagreeing with him. Guys, we live in a world where we're going to have disagreements at the end of the day. So it's not that who's right or who's wrong. We're trying to understand what impact that will have. Right now, the oil price seems like, from the technical standpoint, the structure, really, we're pushing back to the 113. And this is going to increase the inflation risks within many countries, because to attain oil is going to cost more. We know that China depends 91% on that strait. We know Japan is coming in there about 95%. Dependence on the Strait of Hormuz. So it's very interesting, at this point to see what's happening. But the oil price has surged up again, and inflation risks are there. Like I said, the Australian economy has already hiked their rates due to the oil price. All right, and for them, obviously, guys, getting oil is critical to be, getting it from that specific strait. But not only that, if they're buying it from other countries as well, let's say they're buying it from Japan or China, they also need to get oil. So if they get it from China, it's maybe a shorter way for them to get it straight from the strait. Sorry for the plain word there, but it is what it is. Yeah. So we want to see what happens today at 2:00. I think after the London session has really settled in nicely, we're going to have a bit more data here, technically and structurally, to give a bit more views and opinions on the possible direction. All right, but for now, guys, even gold at this point in time, we have managed to push to the upside. But again, watch the dollar today. All right, watch the dollar today. We could be getting a bit of strength coming in there. We're seeing that it's rejecting the highs of yesterday. You can see it. It's rejecting the highs of yesterday, and we're going to see what happens after 10 a.m. this morning when the Asian session is done. All right, but that's it from me here. Very straightforward indexes. We're looking at the crypto, we're looking at the oil price, and obviously the metals as well as FX this morning. A nice broad overview, really. We're going to see if there's any movement in it this afternoon, but for now, we're looking at a stronger dollar that has emerged for now. And we're seeing the index going a little bit down, and we're looking at Bitcoin really just staying still, and the oil price then pushing up to the 101 and possibly 103 before 12 o'clock this midday. All right, but that's it from me here this morning, guys. The opening bell. Ashley Reeve here. Join me at 2 o'clock for our live trading room. It's going to be great and epic to be with you guys once again. All right, have a good one. Ashley Reeve here, and I'm signing out. Ciao, ciao.